My name is Amir Adnani. I'm the CEO of Uranium Energy Corp. Uranium Energy Corp is listed on the NYSE Amex. Our stock ticker is UEC. We're a U.S. company headquartered in Corpus Christi, Texas, and as a development stage uranium company, we've focused on acquiring previously explored projects, and we've positioned ourselves to become a uranium producer with the ISR in-situ recovery technology, which is a very low-cost way of mining uranium, and it's also environmentally friendly. We have a fully licensed processing plant, and we have a number of projects in Texas that will be taken to production over the next few years, with initial production in the fourth quarter of 2010. We're soon to join the ranks of uranium mining companies in the world, which are not that many of. And we have 23 other projects outside of Texas and 5 other states that give us a very long pipeline of projects that we can develop into a rising uranium price environment. We are very well positioned. In fact, I think we are the best positioned of development stage companies to benefit on what ultimately is going to be the nuclear renaissance, expanding nuclear capacity globally, and all of that putting more demand for uranium out there and basically increasing and growing demand for uranium. We are a company that has an existing licensed and constructed uranium processing plant. In Texas, that's our Hobson facility. We have a project that's going into production fourth quarter of 2010, the Palangana deposit. And all of this makes us a very viable uranium company with production just on the horizon and very much in a position to take advantage of rising uranium prices driven by the macro dynamics in the energy business, the nuclear renaissance, which is very much going to be affected by the issues of peak oil and other environmental concerns around CO2 emissions. Nuclear is going to be a key energy source for the 21st century. With ISR mining, and ISR stands for in-situ recovery, this is basically an alternative way of recovering uranium, an alternative to conventional mining being open pit and underground mining. In conventional mining, we're basically moving earth, and that requires expensive equipment and expensive conventional milling and refining. In-situ recovery, we don't move any piece of the earth. We're moving solution through a sandstone-hosted environment where the uranium deposition is. And we leach the uranium or recover the uranium in solution. And as a result, we end up having a very minimal footprint. We end up having very low costs. And we end up having actually a far more economically attractive way of mining or recovering uranium because all the various expensive conventional mining elements are not present in what we do. We're targeting the fourth quarter of 2010 for initial production from our first satellite project in South Texas. And this is something that transitions our company from a development stage company to a producer, which is something that we're very excited about, obviously. Next year, we look to develop our second satellite project. This is the Goliad project, which is in the final stages of permitting right now. And then we have 2 other projects, 2 other satellite projects in the pipeline that really give us a very robust platform to be able to bring 2 new projects in production, fourth quarter of this year, 2010, and then next year. But then beyond that, have the necessary resources and bandwidth to further expand our resource base and production profile. They have to rise again. If prices don't rise, then we will simply not see an expansion of mine production globally, which is absolutely necessary to meet this growing demand that we have for uranium. The bottom line is that we have a supply imbalance. We have shortage of uranium supplies from mine production today, notwithstanding the fact that demand is going to inch higher. And the reality is that a lot of the imbalance or shortage of uranium supply has been filled through secondary supplies being military and civilian inventories of uranium. Well, those secondary supplies were always finite, and we've been drawing them down over the last 15 to 20 years. We've exasperated the world's secondary supplies. And so today, the only way to bridge this gap and to basically replenish uranium resources globally, we have to rely on new mine production. Mining uranium with conventional mining techniques is expensive. And in fact, the average cost of mining for conventional mines is anywhere in the $40 to $50 per pound range, which isn't, that's basically today's spot price. So we simply don't have enough economic incentive for conventional miners out there to develop projects today. Hence why projects must rise and prices will rise. In that period and between now and then, the only projects that will be economically viable will be in-situ recovery or ISR projects because we benefit from a much lower cost. ISR projects are typically in the $10 to $15 per pound range to recover, so much lower than conventional mining projects, and also just require significantly less upfront capital to be developed. I think a very strong recent indication of a rising uranium price environment coming are the developments around the fact that, number one, Goldman Sachs, one of the world's largest investment banks, they have a commodity trading division, which has now recently got into the uranium trading business. Their commodity trading desk has now stockpiles of uranium and will be making a market in uranium. This is a very strong and positive development. We've seen China sign long-term contracts with uranium producers like Cameco and Paladin, which definitely demonstrates that China, as an up-and-coming nuclear source, will definitely be looking at stockpiling uranium because they need it. And lastly, we've seen the Russians. The Russians that had the secondary supplies for the longest time have recently taken control interest of a uranium mining company, which indicates that even they view mine production as a very necessary ingredient to replenish their stockpiles. Uranium Energy Corp is the only development stage uranium company in the world that will have 2010 production startup. Transitioning from a development stage company to a new uranium producer is very rare and also very exciting. We have the initial production at this point that's going to come from Palangana is fully financed and is fully licensed, so there are no risks associated with those issues. All of our projects are in the US, which are politically stable. We have a technical team that was involved in constructing the last ISR uranium mine that went into production 5 years ago, and that's the same team executing our business operating strategies today. And last but not least, it definitely seems that with all the developments with the uranium price that are positive for prices, our initial production, which is 100% unhedged, is coinciding very optimally with what should be a rising uranium price environment in the fourth quarter of this year and going into 2011, 2012. It's all about timing, and I think timing here is very positive and in favor of UEC.